Thanks for joining. I think great to see this panel here. Maybe what I think is also building on the question where I was anticipating on. I think a lot of entrepreneurs will find that it's pretty hard actually to get in touch with a VC, and then basically the trajectory is always quite intransparent. So how do you resolve that for yourself? What kind of effort do you take to actually make yourself accessible to entrepreneurs? Can I ask you to start with that first, Roberto?
I can be loud as well, but yeah, I'm not too sure how inaccessible VCs really are. I think what we see in progress, at least in the Netherlands for the last 5 to 10 years, is the literacy and the knowledge about how capital works. So there is seed money, there is Series A money, there's growth money. And I think that if you know where you are with your company, I think it is becoming more and more clear what potential finance partner you want to approach.
What is your main advice for any starting company approaching you? Or in other words, what would definitely put you off? What kind of presentation?
If you send an email to info@incafcapital.com, I'm not sure you're on the best track.
Nice.
So I think maybe the accessibility, thanks for that answer. I think it really helps that you at least take the effort, but it might be difficult for people to understand not to send the email to info, right? I mean, basically, if they just come up with through some web browsing, that might just still be the only way that they can find. But introductions probably are the best way to get on board, right? So I think that's quite general. But how do you go about that? Could you perhaps elaborate on that? So how to get these introductions?
Sure. I think we actually suffer from the opposite problem. So our firm has a very active outbound calling program. We have about 20 analysts who spend every minute of their day calling every technology company around the world. So we actually have a lot of entrepreneurs who are like, I don't want to waste my time talking to a junior person. And I think that's one of the bigger mistakes, is that a lot of entrepreneurs don't understand that every fund has a different hierarchy. And while generally the managing partner is the person who makes a decision on investments, I've led my own deals even though I'm just a vice president. And we give a lot of power to the analysts, who are actually kind of the gatekeepers at our fund. So anything that they think is interesting comes up to me, but they have to think it's interesting first. And so if you're an entrepreneur and you tell them, like, I don't want to talk to you, it's a waste of my time, you're shooting yourself in the foot, because you're immediately cutting away your access to hire people at the firm. And I think the other point is it's all about who you know and making people like you. So if you can make everyone like you, you will get money, because we want to work with people we like. And it's the God honest truth. So one of the biggest mistakes I encounter a lot with entrepreneurs is they spend tremendous amount of time putting together a slide presentation, and they just absolutely have to stick to it during their meeting with me. And it's really irritating, because I want to ask questions about the company, and if I'm asking questions and it's not on your slide, it's because I'm actually interested. So don't tell me like, oh, that's 5 slides away from now. Like, I want to know now, because we're having a conversation. And if you can't have a conversation with me, then we're not going to be friends. And if we can't be friends, then I probably don't want to work with you. So that's kind of, I think,
so good advice. So it's actually
may I ask a question on that? Because I mean, great entrepreneurs are not necessarily likable in the beginning, but they can be extremely smart and fast thinkers, but not necessarily maybe socially intelligent enough to deal with you.
I think that I like all types of people. I especially like very smart and very fast thinking people. So I'm not saying that you have to be like a charming person, but you have to be aware enough that you're entering into a relationship with another group, right? And when you raise capital, you're bringing somebody into your business. It's kind of like bringing them into your family. And so if you can't read each other and you can't be on the same page from early on in something as easy as a first meeting, it's going to be really tough when you're sitting in a board meeting and you're facing, the company's running out of cash in 2 months. How are you going to handle that situation? And for me, it's really important to know that the person that I'm talking to is going to be able to have a conversation with me and we can relate. It doesn't mean I have to think they're the most charming person in the world. I just have to be able to be on the same page.
Thank you.
I think it's good. So you're also building relationships, right? So I mean, the relationship will need to make it work. How does that work? Does that work different for female entrepreneurs, for example, or with male entrepreneurs, or from an investor perspective? Does anyone have an opinion on that? I mean, I mean, why are there mostly guys in the room, right? So that's basically always the question. I think it's interesting to answer.
Because it's mostly guys giving out money.
That's true. So, but that's why I'm asking you. So, right? So, is there something to do about that?
Well, I think it's almost 4 questions in one. I'm trying to elaborate
just
on
pick one.
which one. Yeah, pick one I like. Well, I want to go back to your question, the question here before, because we have a little bit different approach, and that's like I explained in the pitch. Every Thursday we have an open office, and you can come enter our office. Just give us a call or send us an email. Not at info. I agree with that with Robert Jan. You don't need to send a business plan. You don't need to. We do not have to have a presentation. Just have a chat with us for an hour. We drink a cup of coffee. And if we think it works, if we see a fit, then we go to the next stage. So
what do you talk about in that hour?
Well, why did you become an entrepreneur? What is your ambition? What's your ambition in life? I mean, there are more things important than the business plan, and otherwise, and most of the entrepreneurs are very good elaborating on their technology. But we would like to know who's the person behind the business plan. And so.
Okay. Well, thank you for that. How does it work for you, Saka? I mean, basically, you're focusing on more mature companies, I think, than a lot of other investors. I mean, how does that work? Do you cooperate a lot with companies that have been invested in before? Probably. Does that work differently with regard to deal flow?
Yeah, first we receive a lot of opportunities. I think 30 per week or so, and we can't basically meet with everybody. But I think would encourage to contact us just by an email and a very short message, what you're doing, why you have momentum, and why you think we should meet with each other. Fundraising is just a sales skill, and of course you can be a very typical guy who doesn't socialize, but particularly in B2B, you need to sell something. And if you want to build a great company, you need also, in hiring people, you need to be able to attract talent and to retain talent and to work with talent to make it a successful company. So I think, getting into a meeting is just to show that you are good in selling something. I think it's important. It's the first step towards building a great company. And there are many ways how to sell, and there are many books written about it. But you just have to try harder and find another way. If you can't do that,
How tough is it to sell yourself in, let's say, 200 words in an email?
Yeah.
Is there no other way to meet you?
It also depends on the business. Some businesses are very easy to explain and to explain what you're doing. Other businesses are more complex, more complicated. But still, if you need to sell to a customer, you need to do the same exercise. What are you doing? What are the advantages? And why can you build a large company out of it? I think that is so essential. And I still see a lot of people starting a company and not able to articulate that.
Are also people you have met that are able to sell a lot of bullshit in, let's say, 200 words that will fall through immediately at first sight? Or you hardly miss anybody?
Sorry, I think being a successful entrepreneur is really top sport. And I see a lot of sporters who don't reach that level. And we are focusing on the real ambitious entrepreneurs who really want to build big companies, and we want to see them having momentum. And then we are really interested. If we see that you are growing very fast, we would love to meet you.
Thank you.
Okay, great. And so, how does that work on the? I mean, Kadeen, Ton, where you're based, basically focus on smaller ticket sizes and then more early stage entrepreneurs. How does that work for you?
Absolutely. Well, we take a completely different approach than I should say the old boys do. At least we try to do. We think that the model is slightly broken, so we try to take an entrepreneurial approach towards investing, but we still like referrals. So, sending a mail to info@keaton.com doesn't work as good as sending it to Ton. Keaton.com.
Good hint.
But I mean, it's like you said. It's yesterday I saw this pitch from this guy. It was completely unexpected. He basically nailed it, and he blew us all out of the building. Actually, he sold something called a button, which you can make some kind of button. Actually, that and he called it a $15 billion business. And I mean, it's all about making an impression. Basically, that's what we mean. So we look at teams, we look at culture fit, we look at people. In terms of deal flow management, it's a really nasty word to say, but we want to provide fast onboarding. So we want to scale the businesses sooner than later. So we do try to provide startups with clear goals when they approach us, so we can help them faster.
Okay, clear. And so basically, if this entrepreneurial approach that you're taking, does it have any effect on the conditions that you usually offer to the entrepreneurs?
In terms of?
So basically, would you have sort of standard conditions, or would you be actually very lean and very entrepreneurial also in the way you engage with entrepreneurs?
Absolutely. We want to take the fuss out of the legal stuff, right? So the less milestones, the better. And there's actually a party, it's called Kima 15, and they have their standards online. It's something we hope to achieve one day, because it should not be about the legal issues. It should not be about the money. It should be about building the team and start scaling the business sooner. I mean, that's why we exist, actually. Yeah.
Okay, clear. So
You very much agree on all that, what he said? Also the older generation here? Yeah? Maybe?
No, congratulations with your new model. I really appreciate that. Yeah. Yeah.
It's nothing strange that he says.
No, of course, there's also innovation possible in our industry, and I'm really encouraging people who try to do that. I think that's the hard lesson. We, of course, find a very successful model for us, and it's of course dangerous, because in the end we can go broke. But welcome.
Thank you. Thanks.
So what I'm also always very interested in is reverse due diligence, right? So actually, if I talk to entrepreneurs that want to get an investment, I always ask them, okay, so what do you know about this investor, and who has told you so? So how do you encourage that, for example, in your deal flow? Do you encourage potential new investors to talk to your portfolio companies, and how easy is that?
I think we try to be pretty proactive on entrepreneurs, that we make available phone numbers and contact in a very informal way to the CEOs that we are backing, so that you guys can also have an idea of the experience of other people who have worked with us. We want to be as transparent, as open as possible. We want to be fair. And then you have to check whether we walk the talk.
Okay. How about you? Oh, yeah. It's your turn again.
I just forgot the question.
No, so basically, how do you allow for reverse due diligence?
Reverse due diligence. So we actually have a pretty, I guess maybe non-traditional approach on that as well. We obviously offer contacts of CEOs that we've worked with, but our firm hosts a number of events every year. So we have a CEO forum, a CTO forum, a marketing forum, a sales forum, probably like 6 other kinds of forums. And we'll invite entrepreneurs of companies that we think are interesting and could eventually be partners with Insight, whether that's a year down the road, 6 months away, or 5 years away. And we invite them to come and attend these forums, so they actually get to directly connect with everyone in our portfolio. And they also get to see some of the value add that Insight brings beyond just my expertise and that of the investment team. We actually have an entire team of almost like consultants that work with us, and they work directly with the portfolio, and they do specific projects like pricing adjustments and market strategy and acquisition strategy, et cetera. So they actually get an opportunity to meet kind of the broader group in general in a formal and informal environment. So it'll have meetings kind of like this and panels, et cetera, during the day, and then in the evenings there's cocktail hours and stuff. So it's a pretty accessible reverse due diligence.
Nice. Thanks. Anyone wants to add something to that?
Well, actually, Don, you just struck right into my heart. That's exactly what we're trying to do. So we're looking at the teams, and they should look at our teams as well. It's not about the money. It's about building a better business. And better business aren't built with cash alone. They were built with the help of the cash. So reverse due diligence, I encourage every entrepreneur to do so. There's enough capital in the market. Unfortunately, they're not always as approachable as it seems at the moment. But make sure you know who you're talking to. It's really important. It's early stage important and it's later stage important. These guys, they're in for the long run. So make sure you make the right choices on their perspective. Yeah.
Okay. Elodie, be careful. You struck somebody at the heart. You already got a child. Can you tell me just in 30 seconds how you got from a secretary at Insight to become a vice president?
I'm crazy and aggressive and tenacious.
Crazy and aggressive mom.
Yeah.
Oh my God.
No, it was an accident, honestly.
An
I
accident.
didn't know how hard it would be. I was really naive. I thought it would be easy, and then once I was in it, I just didn't want to lose the game. So I've been fighting ever since.
Nice work.
Respect.
Yeah.
Well, I'm looking at the organizers, and we actually are going to go have some lunch now. Thank you very much,
Well.
VCs. Thank you very much for sitting down here.
We didn't even get to the hard questions yet. Thanks.